guys to the channel. And on this video, guys, we're going to be breaking down a simple entry model setup that could really be applicable, especially to beginner traders. Now, let's get into it, right? So this is going to be very SMC based. So, I would recommend that you follow every step as it is. Now, this is going to take time to master. Just because that you see this today doesn't mean that it's going to work for you tomorrow. No, everything takes time, especially in these markets. Now, what I'm about to teach you is simply an entry model that that's very effective and that works for me and for a lot of people that I've dealt with. Now, well, we're going to be dealing with three simple things, right? We're going to be dealing firstly with structure, and second with S&D, and third with confirmation, right? So this is going to be the root of our entry model, SSC. Now, first thing is first, right? We need to see a structural play that's actually breaking structure. So in terms of a bullish market, right, we're gonna see a market make that higher high, which breaks this previous structure, and then we're gonna now wait for a pullback towards an S&D zone. So this is step number one, right? We need to see that break of structure right there from a lower high that's gonna form a new higher high. So let's just put you there. Boom. And from there now, the next thing that we're going to look for is that S&D zone, right? In this case, it's going to be a potential demand zone, right? The last place that smart money sold before they bought, right? This area here is what we're going to look at for that pullback mitigation. And then from here, we can now take our entry and target the highs. So with that being said, from this zone now, this is where we're going to be expecting to take our entry, and from here our stop loss will basically be below this zone or below the overall low, and our take profit target will be this high, right? Because this high is currently at the moment holding liquidity. Now with that being said, we're gonna now see what's gonna happen in this area right here, right? So let's box this area. So boom. So from that area, right, from this boxed area, what we want to see is something like this. Sorry for that. Okay. So what we want to see is basically something like this, right, from this boxed area right here. So let's assume that this is our boxed area in terms of magnification, right? It's obviously going to be small like this, but when we zoom in, this is what we want to see, right? Since price is now making a pullback, meaning that in the lower time frame, right? So this is the actual higher time frame where our setup originates from, right? Example like the Euro JPY 30-minute chart. So let's assume this is the Euro JPY 30-minute chart, and we're seeing something like this. Now from this boxed area, within this boxed area right here, right, this is going to be the Euro JPY 1-minute chart. So we're going to drop down from the 30-minute to the 1-minute. Now from the 1-minute, we're going to see something like this, right? Since this is a pullback, so in the 1 minute it's going to be a downtrend like this that's gone in here. And from here now, we're going to see price now slow down, and from this slowdown we're going to see price wanting to break these to break the highs instead of the lows, right? Because it was a downtrend, an intermediary downtrend that was formed with a consistent formation of lower highs and lower lows. Now from this, we want to see a break of a lower high to indicate that a higher high now has been put into place, and from there we can now wait for a pullback and then see that continuation now to the top side, right? So so from here, all we want to see is something like this, right? A break of structure in this Euro JPY 1-minute chart, a break of structure, and from that break of structure we want to see a zone, right, an order block or a demand zone that where actually smart money sold before they bought, right? This area here, and from that area we will wait for price to tap that area and then go bullish from there. So this is the simple entry schematic that I'll be teaching you guys today. Now this is just a theoretical example, right? And the exact opposite of this is true for a bearish example. Now just to make the video short, I'm only going to do a bullish example. Perhaps maybe in another video we'll do a bearish example. Now, so from this bullish example, from there, after that break, we'll wait for this retest here to happen, where this right here will be our entry, our bullish entry, and the stop loss you will decide either at below the zone or below the overall low, right? And our take profit target will be at this higher time frame high. So assuming that our entry was taken somewhere in there, right? And our stop loss was below the overall low. Now this take profit target will be at this high here, which we will call it as a next liquidity run. Boom, just like that. Right, so this is the entry schematic that I'm going to be teaching you guys. Now, with this theoretical example and explanation, now let's go to the charts and see an actual trade that I took it, and how did I take it, and you know, what factors and the rest of the shit that I considered. So let's just clear all this stuff and let's now go back to the actual charts and see how it's gonna be. Now, mind you something, guys, that was a theoretical example. It's based on a picture perfect example. However, in the actual price action, it's not always going to be like that. Sometimes it's going to be tricky. And as you do it over and over again, it's going to get simpler and simpler and simpler to execute and to see it. Now, let's go back to the chart. So this was Euro JPY 30-minute chart. So we had price having this bearish move towards this area of demand right here. However, price from there just shifted back bullish, and of course I was targeting this area right here since it had a lot of liquidity. As you can see, this all this like here is liquidity and that there. So this is just a high time frame analysis of price action. Now our entries based off this area here, right? So when we zoom in this area and see how did price action move in here. So price comes in, makes a low, comes up, makes a high, makes this high, and then comes down, takes out this low and creates a new low. Now when we come into that exact view, right, this low right here was pretty much formed by this high right here, right? So from this low to this, we were pretty much ranging from this low to this high right here. So with this price action moving up and coming to take out this high, this was the actual break of structure to the top side, or the change of character that we wanted to see to give us an indication that price from here was going to move bullish. Now, however, after seeing that, so let's go to the 15-minute charts. It's going to be way much clearer. So as I say, we were ranging from this high to this low, and then this high right here was taken out right there. So we're gonna name this as our change of character. So from there, the market now we know has changed character from bearish to bullish. Hence, so from there now, when we come to see which low created the high, you'll find that this low is the one that initiated this break of structure to create this high right here. And from this low to this high, the actual so that's our first S, right? So that's structure S, right? So now we come to the second S, which is supply and demand zone. So from here we need to see, since it's a bullish case, we need to see a demand zone, which is what, obviously, right? The last place where smart money sold before they bought very hard, which, as you can see, is pretty much this area here, right? From this wick here to this pivot here, right? This is the, as you can see, this bearish candle here, right? It sold very hard and then it bought even harder, closing with all this pivot, this very long pivot right here, right? So this is generally going to be our area of demand. Boom, like that. And from there now we have our first S and our second S. So the next thing, or the last thing that we're going to look at, we have SS, and now we're going to look at C, right, which is confirmation. That's going to be done in the 1 minute chart. So from there we can now just drop down timeframes to the 1 minute chart and see what happened in here. Boom. So okay, let me make this large. Let's zoom in, and boom, right here. Okay, so this is the last place that, you know, we regarded as our order block or the demand zone, the last place that smart money sold before they bought. So from this high now, price comes in and steps in, price comes down and steps into our zone. Now from here, as I said before, right, we can see that there's a series of lower highs and lower lows being made, right? Lower low, lower high, lower low, lower high, lower low. And from here now, price comes up and then takes this lower high to create a high high. Now, lo and behold, as I said before, right? So let's do this, right? So price has now done something like this, right? So price has now taken out this low high to create a high high. Hence, we're going to look or wait for that pullback for price to step into a demand zone and then take our bullish entry now to the top side, since this right here is our change of character, right? Boom. So with this break here, boom. So from this break here, we now know, so let's just name it change of character. So from this break, we now know that the pullback is over, and from here, price wants to go bullish. Lo and behold, the next thing that we're gonna look, so it's just repeated, right? It's SSC, right? So we had a higher time frame S, higher time frame S again, and now we are in the C, right? So in the C, we also need to see an S and an S, right? So first thing is first, we need to see that change of character to indicate that the pullback is now over and the market is returning bullish. So this is what we saw here with this change of character right here in the 1 minute time frame. Now the next thing we need to see is the second S, which is the S&D point, right? The demand zone, the last place that smart money sold before they bought. Lo and behold, that area is going to be precisely this one right here. Now as you can see, price comes down, wicks, takes this liquidity here, comes up, fails to make a high, and then this is smart money now playing their move. They sell and then they buy it very fast and very hard, as you can see, to come and create this high right here. So this area in here, this is going to be our last sell to buy, this one right here. Boom. From this high right here to this low right here. Now the next, so that's everything that in there is now done. So the last thing we're gonna do is now take or place our long position order here, right, at this area right here. Boom. And then our stop loss, as I said before, is going to be below the zone or below the low, right? That's basically up to you. And our take profit target will be at the higher time frame high. So let's just extend you like that and then go back to the 15-minute time frame. At the higher time frame high, which is basically this high right here, right? So this high right here, right? So this basically, that should be our take profit target number one. Now, as I said before, since we had this higher time frame analysis and bars, so my overall take profit target, right, the last take profit target was at this area here, this zone right here, which makes it about boom, right there, 180 pips with a stop loss of 5.7 pips. That makes it a 1 to 31 RR trade. Now, with that being said, guys, I hope this video was very informative to you. And if it was, then don't forget to hit that like, subscribe if you haven't, turn the bell button on, and of course, guys, the MMC Footprint Strategy Mentorship for February and March is underway. Of course, you can DM us on Instagram at officialgreenpipsfx to book your seats very early if you're interested to get much deeper and deeper and deeper into this SMC stuff. With that being said, guys, I wish you all the best. Have a nice weekend. Have a nice shading week. And of course, guys, don't forget to stay safe and peace out.